You're sipping something neon out of a coconut when your stomach stages a coup. 10 minutes later, you're negotiating with a clinic receptionist in a language you barely speak, staring at a price list that looks like a phone number. Your brain does the math you never wanted to do. How do I get care fast, not get bankrupted, and not turn next year's tax return into a horror movie? This isn't just travel planning anymore. This is the moment where health, money, and tax rules collide in the noisiest possible way. The good news is, you can walk through it calmly if you know which levers matter and when to pull them. Start with the only clock that actually matters in an emergency: now. In most countries, emergency rooms treat first and bill later. Hand over your passport, proof of insurance if you have it, and let the medical team do their job. As soon as you can breathe again, ask for itemized invoices, a doctor's letter describing the diagnosis and treatment, proof of payment, and the clinic's tax or registration number on the bill. Those 5 things are your golden ticket for everything that comes next: insurance reimbursement, tax deductions, HSA or FSA reimbursement, and the inevitable argument with your future self about what happened when. If you have travel medical insurance, it's time to use the grown-up voice. Call the 24/7 number on the card. Insurers care about 2 things: proof you existed in their system before the illness, and proof the care was medically necessary. They may offer direct billing to the hospital. If not, you'll pay and claim later. Keep receipts for everything that touches the injury or illness: clinic, pharmacy, medically necessary transport, and, if evacuation is ordered, every step in that chain. When the adrenaline fades, log dates, locations, and currency used. You don't need a memoir. You need a short, accurate trail. The tax connection begins while you're still abroad. If you're a U.S. taxpayer, the medical expenses you paid out of pocket may be deductible as an itemized medical deduction to the extent they exceed the 7.5% of adjusted gross income threshold. That threshold is a wall. Only the expenses that climb over it count. Timing matters here in a way that actually helps you. If the clinic lets you pay in 2 installments and the year end is near, understand that the tax system cares about the date you paid, not the date you got sick. You can also reimburse yourself from a health savings account if you had one open before the care, and the expense is a qualified medical expense under the rules. Foreign doctors and pharmacies don't magically disqualify your HSA. What matters is that the service would qualify at home and that you can document it. Keep the invoice and translate it simply if it isn't in English. If you used a flexible spending account through your job, the same idea applies. Eligible medical expenses can be reimbursed with proper receipts, even if the care was abroad. Your FSA may want a doctor's statement and a translated bill. Give them exactly what they ask for, no more, no less. If you're self-employed and you buy your own health insurance, premiums for an international or expat plan can often qualify for the self-employed health insurance deduction, which reduces your taxable income even if you don't itemize. That's a different bucket than the medical expense deduction and can be taken in the same year you paid the premiums. What you don't do is try to put personal medical bills into business expenses because you were traveling for work. Medical care is personal. It either belongs in the medical deduction world, the HSA FSA world, or the insurance world, not in meals and entertainment. There's a subtler clock ticking in the background while you're recuperating in a hotel with too many pillows. Tax residency. If illness keeps you in a country longer than planned, you can cross a bright line without noticing. Many systems use day count tests to decide whether you're a tax resident. In the United States, the substantial presence test looks at a weighted total of days across 3 years. In the United Kingdom, the statutory residence test counts ties and days, and then graciously lets you ignore up to a limited number of days for exceptional circumstances, which can include serious illness, if you meet strict conditions. Other countries have their own versions of common sense baked into their rules, but common sense lives inside precise limits. The practical point is simple. If you're stranded by illness, write down the days and keep the hospital paperwork that proves why you stayed. Those documents can be the difference between being treated as resident and non-resident in a place you never intended to live. Residency isn't the only trap. If you work from your hospital bed or Airbnb while recovering, that just a few emails can matter. Some countries tax employment income for days physically worked there, and some treaties allow short-term relief only if you keep to strict conditions. If you're an employee, your company's payroll team needs to know where you actually worked, because a country can demand wage withholding for those days. If you're self-employed, long assignments in one location, a rented office, a local agent who habitually signs for you, these are the ingredients for a taxable footprint called a permanent establishment. Being sick doesn't create a permanent establishment, but doing business in a way that looks local can. And getting stuck for an extra month sometimes pushes you over a threshold you didn't realize existed. The rule of thumb is clean. If you took meetings, signed contracts, or ran a local project while convalescing, write a short note for yourself stating when, where, and why. If you truly did not work, write that too. When tax seasons roll around, you won't be guessing. Back at the clinic checkout desk, currency becomes a character in your story. Pay with a card if you can. The statement will capture the exchange rate and date, which is exactly what tax rules and insurers want. If you paid cash because the card terminal was resting, record the exchange rate you used and save the receipt from the money changer or the ATM withdrawal. Governments allow reasonable methods for converting foreign expenses to your home currency. Reasonable means consistent and well documented. If you're filing in the US, most people use the rate on the transaction day or the yearly average published by a reputable source. You don't need to be perfect, you need to be defensible. There's a category of costs people forget to claim because the receipts look banal. Medically necessary transportation can be part of a medical deduction or an HSA reimbursement. Taxis to the hospital, mileage if you drove, even a portion of lodging if you had to stay near a clinic for care, within limits. If a doctor signs off on an evacuation as medically necessary, that becomes a medical expense too. Meals for your traveling companion aren't deductible, but a companion's lodging can be when their presence is essential for your care. The word you're looking for in your files is necessity. The phrase you want on a doctor's letter is medically necessary. Employer coverage adds another layer you actually want. If your employer provides health insurance and reimburses medical care under a formal plan, those reimbursements for qualified medical expenses are generally not taxable to you. If they hand you a random stipend with no plan and no substantiation, that cash can become taxable income. When you get sick abroad on a work trip, send the receipts to the HR channel your benefits guide describes, not to your favorite manager on WhatsApp. Plans have rules, so the tax treatment is clean. Disability insurance is the quiet, boring adult in the room. If your illness knocks you out of work beyond the vacation and sick leave window, short-term or long-term disability can kick in. Whether the payments are taxable depends on who paid the premiums. If you paid with after-tax money, the benefits are typically tax-free. If your employer paid and didn't include the premium in your taxable wages, the benefits are usually taxable. This doesn't change because you got sick abroad, but it becomes relevant faster when travel goes sideways. If you're the planning type, check your policy before long trips and adjust your emergency fund if the taxable benefits scenario would hurt. Let's land the plane for the US crowd with the 3 letters people throw around without context: FEIE. The foreign earned income exclusion can shelter wages or self-employment income earned abroad if you pass either the bona fide residence test or the physical presence test. Illness can wreck carefully drawn day counts. If you plan to hit the 330 days abroad test across 12 months and an emergency flew you home, your exclusion might shrink. If you're already a bona fide resident of another country, you're more insulated, but documentation still matters. This is another reason to write a one-page memo to future you that says exactly where you were, when, and why you moved planes and countries. The foreign tax credit can also step in if another country taxes your income while you're there getting well. Keep any tax receipts or pay slips that prove you paid foreign income tax, so your home country doesn't tax the same dollars twice. Medical bills themselves aren't taxes, so they don't generate foreign tax credits. They live in the medical deduction and HSA worlds. If your story involves the United Kingdom, the stakes look different. The statutory residence test allows up to a limited number of exceptional circumstances days where you can disregard time in the UK if you were stuck due to circumstances beyond your control, including illness. The key is the cap and the proof. Keep the letter from the hospital that states you were unfit to travel and keep boarding passes that show when you finally left. If you own a UK buy-to-let and you spent unexpected months in Britain, remember that capital gains on a property sale and reporting windows for residential gains march to their own drumbeat. An unplanned residency shift can change which rates and allowances apply. The lesson is the same in different accents. Days count. Proof beats vibes. For the European Union broadly, public care is often subsidized but not free to non-residents. You may pay a fee at the point of service that feels like a tax, but isn't. If you live and work in an EU country legally, Social Security contributions generally open the door to public care. If you're a tourist, travel medical insurance is your lifeline. If you're a digital nomad in Spain under the impatriate regime, or in Portugal under a new visa lane, or in Croatia enjoying your laptop with a view, healthcare choices are part of your residency story. Some systems allow buy-ins, some demand private cover until you've contributed. What tax cares about isn't where you got the stitches. It cares whether your life on paper matches your life in photographs. If you tell one country you've moved there for real and another country that you never left, The math will collect interest while the story unravels. The part where you go home is where most people stop caring and where grown-ups keep going another 15 minutes. Scan and store every bill, prescription, and receipt with a file name that explains itself: date, provider, location, amount, currency, purpose. Add a short note in plain language: hospital visit for acute appendicitis. Invoice shows procedure and payment. Taxi receipts to and from clinic. Convert amounts into your home currency using a sensible method and note the rate. If you're going to claim a medical deduction, gather the year's other medical costs so you can see whether you clear the threshold. If you're planning to reimburse yourself from an HSA, confirm that your HSA existed before the date of the expense. You can reimburse in a later year as long as the expense was incurred after the HSA opened and you didn't deduct it elsewhere. Don't double dip, pick a lane and stay in it. If the illness forced itinerary changes, save the emails where airlines and hotels said no refunds or partial refunds only. Those aren't medical expenses or tax deductions, but they matter for travel insurance claims and for any credit card protections you might invoke. If a claim pays out, most travel insurance benefits for medical costs aren't taxable. If an employer reimburses you outside a plan with no substantiation, they can become taxable wages. If a government or aid program reimburses costs, check the letter. Many programs specify whether payments are taxable. When in doubt, assume the IRS or your local tax office wants to see the paper chain, not your best recollection. There's a human layer to all of this that tax software never sees. People feel embarrassed that they got sick in a fun context, or they feel guilty for not reading the full insurance policy, or they feel afraid to tell their employer exactly what happened. None of those emotions help you heal or file cleanly. The story that wins with insurers and tax authorities is short, factual, and boring. I traveled on these dates. I became ill on this date. I sought care at this place. Here are the invoices and proof of payment. Here is the doctor's letter. Here is the insurance policy and the claim number. Here is my HSA reimbursement request with the matching receipts. That's the voice that gets you paid and keeps you safe.